Hi everyone, today let's talk about the Fed meeting, then we'll go over the Fed futures and economic data, then we'll go over Max Payne, then we'll get into the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So we got the pause, but it came with some catches. They talked about 2 more rate hikes coming later this year with a potential terminal rate in that 5.6 area by the end of 2023. So that gives them quite a bit of room to go for another 2 rate hikes. We have no idea when that could come. They also talked about how they've continued to reduce their holdings at a brisk pace, and they say they've covered a lot of ground, which is no big surprise. They continue to offload their balance sheet. And this is currently being called the hawkish pause, so they talked about more hikes that we weren't already forecasting, but they did give us the pause that we were anticipating. You can see that chart here, incredibly steep, very fast rate hikes. And now we're here, paused at this level. We'll see what happens. And they mention here in terms of expectations, people somewhat expected a hawkish pause. Honestly, I didn't really expect that. I haven't really seen that from any of the commentators, that they were potentially going to put forward 2 more rate hikes. And that was definitely more hawkish than I would have expected. And they now mention that the terminal rate for 2024 is down around 4.6%. So if we get 2 more rate hikes, then we should expect about a 1% cut next year, and then about another 2% cut by the end of 2025. Obviously, a lot could happen between now and then, but we'll take a look at the Fed futures and see what it looks like, at least to the end of the year. Jumping into those Fed futures, you can see it's now 6 weeks away until that next Fed decision in July, and the highest percent chance is a hike in July now. That's definitely new. Looking at September, we're now expecting a pause after the hike. And once we get to December here, it actually looks like potentially another cut. So the markets and Fed futures still disagreeing. The Fed says 2 more hikes. The markets say 1 and potentially a cut at the end of the year. And then looking at January, we're still expecting that cut, assuming that we get 1 more rate hike between now and December. Moving over to the economic calendar, you can see PPI as expected on core month over month, but much better than expectations here on headline month over month. Makes sense. Headline CPI was better than expectations, and headline PPI also better than expectations. And then looking at tomorrow, we have retail sales. Expectation is 0.1, which is a pretty substantial step down. Initial jobless claims also expected to step down. I think this will be pretty interesting tomorrow. And then headline retail sales expected to go negative again at that 8:30 time frame. Moving over to Max Payne, basically no change from yesterday, still 415, put call ratio still at 2, very few added options, still looking at that 415 to 420 area, or the point where all of these puts go worthless, right around that 436 level, and we are still well above that. So all of these puts looking to turn out worthless this week, and that's basically the same close that we've gotten over the last 3 weeks. Moving over to the charts, starting off with the S&Ps here on the hour and the daily, you can see we got up to that level very close, just about 50 cents off of my resistance level, and we got a doji, so certainly an area where we could potentially see some pullback, at least to the 9 EMA, not impossible from these pretty extended levels on the daily chart. Hourly momentum definitely starting to look more bearish. RSI looking weaker. We did find a substantial amount of buying down around that 55 EMA on that spike that we saw right around the Fed announcement. So overall, probably neutral at this point. We have some decent support to our lows and decent resistance to our highs on the S&Ps. Moving over to the NASDAQ, not quite the same thesis, much more bullish day. We got above my resistance, so 365.80 is now my support level, and I'm watching for that to rally up to 371.25. I'll be watching that mid-range right around that 369 level, but 371.25 is now my upper price target as we saw that rally through this resistance level, and it still looks bullish. Hourly momentum flipping more bullish, daily momentum still very bullish. Moving over to the Russell and the Dow, very different thesis here on the daily chart. Russell hit that level once again, 189, and it pushed all the way down to the 9 EMA, down at 184.93. Momentum stepped down here, more bearish. RSI also stepping down towards that SMA, and this looks more like a topping pattern here now. Still could hold support at the 9-day moving average and push back up to 89, but this looks much, much weaker, big engulfing candle, and it's definitely worth watching more to the downside after this pretty decent rally. Similarly here on the Dow, you can see we got the wick yesterday, and now we got the gap down and move down, and this looks much more like a rejection type setup, similar to what we saw here, big wick, rejection, and then we ended up seeing more follow through down to that 55 EMA, which is sitting down around 335.17. Moving over to Apple and Tesla, you can see Apple still bullish, very slightly. Momentum definitely fading, RSI also fading. Certainly seems like we're going to get a bit of a pullback once again. Similar to what we saw here, we're kind of at that topping type pattern in my opinion. Still very bullish, and it could absolutely go higher here. But in terms of lower levels, I think we could get back down 182.37 or potentially pull back to this 178.58 level and start to chop in this zone. Definitely worth watching and looks weaker. Tesla also posted its first red day in a very long time. We haven't had a red day since 24 May, so that's also worth watching. 264.68 is my resistance level. If we do start to see a bit of a pullback here, there's a lot of room before we could see any kind of decent support if this starts to gain momentum to the downside. Again, still super bullish and absolutely could go higher, but it is very extended as well. Moving over to the AI players, Broadcom and NVDA are continuing to go higher. Very strong leg up here today. NVIDIA almost 5%, Broadcom slightly more than 4%. Momentum and RSI both look super bullish, so we might be seeing a little bit more of a breakout on the NASDAQ, again driven by these AI type players. Moving over to staples and discretionary, you can see staples pushing higher once again. Definitely seems like we've bottomed and like we're going to go a little bit higher. 75.40 is my next level. Also worth watching the 200 SMA here at 75.05. Discretionary also finding some weakness. Tesla found weakness. Discretionary finding weakness at 166.78. If you're going to trade this to the downside, that is the level to trade off of. Again, super bullish, being driven mostly by Tesla here, but momentum did flip bearish on the 4-hour, and volume to the downside was also fairly extensive. Moving over to breadth, 200-day average breadth actually went lower after hitting that 58.90 level. Very clear level, marked these previous tops. Last time we got a candle like this, we got some chop and then a decent breakdown, so definitely worth watching this level. We'll be following this one closely, especially if it ends up driving a little bit lower here. That could take markets with it. 50-day average, also slightly red, but much less red than the 200-day average. Just barely got below my level, 62.25. Again, I'll be watching it very closely, but both of these still could go higher. Moving over to the dollar here, you can see we got a little bit of a breakdown from this structure. This looks much weaker now, and if we start to make lower lows outside of this structure and we don't get back into it tomorrow, that's going to be pretty bearish. Momentum on the daily, also very bearish and now accelerating. As long as this continues to go lower, we should see equities at least hold, if not go higher. So definitely a break in structure here on the dollar. Moving over to the volatility indices, they are both moving lower once again. We talked about this potentially just pushing into this area for CPI and FOMC, and that does seem to be the case now. So we've broken down from that level. We're back below horizontal and trend resistance, and it looks like we're going to push back into this zone. Below that, I'm still watching 1177, certainly could push into that area. RSI definitely still very bearish here on the VIX. Moving over to my accounts, you can see I was up just a few $100s. I was pretty light on my positions going into the day, as I thought there might be some risk with the FOMC and how extended we are. And we did see that a little bit on the IWM as well as the Dow. NASDAQ, on the other hand, continues to rocket higher and does not seem to care at all about those hikes. I did add some positions for tomorrow, some 359 puts I had already, and then those 363 puts. I added one of those, and then I added one covered call for tomorrow, 367 call for $1.46, and then I let those 358s go at expiration here today. Market's already continuing higher. You can see it's already up at 366.25 after hours. So it looks like we're going to continue to go higher on that position. Again, I'm still trading the NASDAQ to the upside, but watching it carefully. And then for the IWM, I had that one put that expired worthless here today. You like to see it, and I'll be looking for another position here going into the Friday expiration. Let me know down in the comment section what you thought of Jerome Powell's comments. Were you surprised by the potential for 2 more hikes? I certainly was. I definitely did not see that coming. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.